Hello, and welcome to my channel. Today we would be discussing about best investments to start in Central African countries. Number 8. Sao Tome and Principe. Sao Tome and Principe is a small island situated in the equatorial Atlantic and in the Gulf of Guinea of west coast of Central Africa. Portuguese is the official languages. It practices a mixed legal system based on Portuguese model and customary law. It has an area size of 964 square kilometers. Sao Tome and Principe economy is dependent on cocoa, representing about 66% of agricultural export. Other export crops include palm kernels, copra, and coffee. Tourism, which contributes 32.9% to GDP, is currently one of the main sources of foreign exchange receipts. Its currency is dobra, which is pegged to the euro. Main exports are cocoa, coffee, coconuts, palm kernel, bananas, fish, copra, etc. In recent years, Sao Tome and Principe government has taken proactive measures to reduce tariffs, improve the investment environment, and establish free trade zones to attract foreign investment. It focuses on investment in infrastructure such as ports and electricity. Sao Tome and Principe is building up its services industries, especially tourism, with the aim of diversifying its economy away from agriculture. Tourism is expected to benefit from the Tourism Development Strategy launched in January 2018 and the new e-visa system. Investment opportunities are available in the following sectors: agriculture, livestock, marine resources, hydrocarbon, etc. Number 7. Rwanda. Rwanda is a landlocked country located in East Africa. It shares border with DRC to the west, Uganda to the north, Burundi to the south, and Tanzania to the east. Its capital is Kigali, with 4 provinces which serve as administrative divisions. English and French are the official languages, while Swahili is commonly used in commercial centers. Rwanda is a predominantly Christian country. It has a mixed legal system which is based on German and Belgian models and customary law. It has an area size of 26,338 square kilometers. The Rwanda economy depends on agriculture and tourism. Its currency is Rwanda franc. Agriculture accounts for about 29% of GDP, employs about 67% of the labor force, and contributes around 80% of foreign income. Tourism sector is also a critical part of the Rwanda economy, as the country positions itself as the continent's hub for hosting of international conferences thanks to significant investments in infrastructure. GDP grew 9.4% in 2019, having recorded 7.4% compounded annual GDP growth in the past 5 years. Main exports include tea, coffee, hides, and tin ore, etc. Rwanda has sustained high economic growth in the past 10 years, sustained by an investor-friendly climate and significant progress in governance and relative political stability. Rwanda's mining, oil, and gas potential is still to be fully exploited, while preliminary studies indicate potential significant reserves in rare earth minerals, petroleum, and gas. Investment opportunities are also available in the following sectors: agriculture, tourism, ICT, infrastructure, real estate and construction, energy, financial services, health services, and education. Number 6. Gabon. Gabon is located in Central Africa bordering the Atlantic Ocean. French is the official languages and a predominantly Christian country. It practices a mixed legal system of French civil law and customary law. It has an area size of 0.267 million square kilometers. Gabon has one of Africa's highest average per capita incomes. It shares borders with the Republic of Congo to the east, Equatorial Guinea to the west, and Cameroon to the north. Gabon is 5th largest oil producer in sub-Saharan Africa, Africa's 2nd largest producer of wood, and world's leading producer of manganese. It has extensive rainforests and savannas, offering potential for ecotourism and industrial timber sector. The slump in the crude oil price in 2014 resulted in a decline in government revenue, pushing the country to sign a 3-year extended agreement with the IMF in 2017. To restore macroeconomic stability, it managed to achieve a compounded annual GDP growth of 2.5% over the past 5 years. The Gabonese government implemented an economic recovery plan for 2017 to 20 following declines in the crude oil price in 2014 under the support of IMF. The plan aims to ensure inclusive growth and macroeconomy stability by reducing dependence on raw materials and promoting economic diversification through revival of its agricultural sector, cocoa, coffee, and palm oil. The plan also focuses on the forestry sector as it plans to transform its forestry industry and increase its value add. There are also plans to develop tourism, particularly ecotourism, to take advantage of its forest heritage. Outside the oil sector, investment should continue to grow rapidly in the mining, manganese, agri-food, palm oil, rubber, and forestry sectors. Number 5. Republic of Congo. Republic of Congo, also known as Congo-Brazzaville, is located in Central Africa bordering the Atlantic Ocean. It shares borders with Angola to the south, Cameroon to the northwest, Gabon to the west, DRC to the southeast, and Central Africa Republic to the northeast. French is the official language, while French Lingala and Monokutuba is the lingua franca trade language. It practices a mixed legal system of French civil law and customary law. Republic of Congo is in the middle of implementation of the National Development Plan 2018-22 and reforms under the IMF's Extended Credit Facility, which should help the state attract new investors, thus enhancing the economic recovery. Government has laid out ambitious plans to diversify the economy and attract foreign investors to develop key sectors such as forestry, agriculture, construction, ecotourism, transport, mining, and information technology service. Construction of a railway line between Mayoko and the port of Pointe-Noire, with a view to facilitating iron ore exports. The mining industry is also beginning to develop, mainly around iron mining. Number 4. Democratic Republic of Congo. Democratic Republic of Congo has a coastline on the Atlantic Ocean, but is otherwise landlocked, sharing borders with about 7 countries. French is the official language, while Lingala is the lingua franca trade language. It practices a civil law modeled after Belgian law system, also customary and tribal law. It has an area size of 2.34 million square kilometer, making it the largest country in sub-Sahara Africa. Oil has replaced forestry as the mainstay of the Republic of Congo economy. It has abundant natural resources: oil, iron ore, lead, zinc, potash, copper, uranium, diamonds, phosphates, magnesium, natural gas and hydropower, and agricultural potential. Most of the country's mineral wealth remains untapped. Natural gas is increasingly being converted to electricity rather than being flared, greatly improving energy prospects. Oil sector accounts for 55% of GDP and 85% of exports and 80% of budget revenue, making the economy vulnerable to crude oil price shock. Agriculture accounts for 7.1% of GDP and employ about 22% of the labor force. Democratic Republic of Congo has initiated reforms aimed at strengthening governance in the management of natural resources and improving the business climate. Normalization of the political situation in the country and a new determination to reform and fight corruption is instilling a climate of confidence. The country is in the process of adopting 2019-23 Strategic Development Plan, which is expected to give national priorities more visibility. However, sectors where there are investment opportunities include agriculture, mining, energy, infrastructure, insurance, housing and real estate, forestry, transport, tourism, etc. Number 3. Angola. Angola is located in southern Africa. It shares borders with Zambia on the east, Democratic Republic of the Congo on the north, Namibia on the south, and bordered by the South Atlantic Ocean on the west. Angola has 3 main ethnic groups, each speaking a Bantu language, but Portuguese is the official and predominant language. It has a civil legal system based on Portuguese civil law. It has an area size of 1.25 million square kilometers. The country's geographical position provides investors with access to the regional market. SADC of 16 countries with an estimated 200 million population and GDP of $600 billion. Angola is sub-Sahara Africa's third largest economy. The country has made substantial economic progress since the end of the war in 2002. Per capita income has grown multiple-fold since 2003 to reach an all-time high of $400 in 2014. The country's economy is heavily dependent on oil and gas, as it constitutes about 50% of the country's GDP and about 90% of the country's export. Angolan authorities have made significant progress on macroeconomic stability and structural reforms. As the country seeks to diversify its economic from oil and gas, potential sector with opportunities includes agriculture, beverages, electricity, real estate, manufacturing industry, mining, tourism, renewable energy, transport, insurance, etc. Number 2. Central African Republic. Central African Republic is a landlocked country surrounded by Cameroon, DRC, Republic of Congo, Chad, Sudan, and South Sudan. French is the official language, while Sango is the lingua franca and national language. It has an area size of 0.622 million square kilometers. Central African Republic has abundant natural resources, diamonds, gold, uranium, and wood, which are largely untapped, as well as huge arable land. Agriculture and forestry are the mainstay of the economy. Central African Republic has embarked on various reform programs to attract investment. Some of the reforms include reduction of the minimum capital required to start a business, tax incentives for businesses, public-private dialogue framework, etc. These reforms are in addition to the ongoing implementation of peace agreements signed by various warring parties. Some sectors with investment opportunities in the country include mining, forestry, infrastructure projects, tourism, agriculture, export crops such as coffee and cotton, etc. It is the second country in the world to have recognized Bitcoin as a legal tender. The government has launched a series of measures to accelerate and facilitate foreign investment in the field of technology, mining, and development projects like road infrastructure, telecommunications. The Central African government has also launched an ambitious blockchain project called Sango. Number 1. Cameroon. Cameroon is located in Central Africa. It shares borders with Nigeria on the north and west, Congo, Equatorial Guinea, and Gabon on the south, Central African Republic on the east, and Chad on the northeast. French and English are the official languages. It has a mixed legal system of English common law, French civil law, and customary law. It has an area size of 0.475 million square kilometers. Cameroon has an abundance of natural resources such as bauxite ore, oil and gas, and iron. It is one of the major global producers of agricultural products such as cocoa, coffee, bananas, palm products, tobacco, rubber, cotton, maize, and cassava. Agriculture represents about 14% of GDP, and oil and gas about 8%. It has consistently achieved a robust GDP growth in the past 5 years, having grown 4.8%, 5 years compound growth, over the period. Fishing and forestry are two of the country's additional significant activities, as the country has high-value varieties of timber. Cameroon's abundant natural resources, petroleum, gas, bauxite, iron, nickel, wood, and agricultural products, cocoa, coffee, cotton, banana, heave, palm oil, pineapple, offers investment opportunities in the oil and gas and agricultural sectors. Specifically, the country is seeking investment in the following areas: transformation of hydrocarbons, transformation of agricultural products, animal or halieutic, forest exploitation assorted with the transformation of wood, industrial and local fishing, hospitals and pharmaceutical laboratories, tourism sector, etc. Thanks for watching the video. Make sure to subscribe and watch the next video shown in the end screen.